Hello and welcome back to Stock Market Weekly. I'm your host, Evan Medeiros. It is Friday the 13th, and we are going to talk about everything that happened this week in financial markets. Things cooled off a little bit. Markets kind of, they found their footing in some of the worst areas. The most beaten up kind of software names tried to stabilize this week. But we see some other weakness creeping in large cap tech. We're seeing momentum pick up in defensive areas. We see interest rates spilling over. So we got plenty to talk about. Let's get into it. Hope you're doing well out there. Our sponsor of this episode is Investors Business Daily. I was just talking to the team over there, making lots of updates to their market surge charting platform. Check out the links in the description of the show once you get done watching, and see if you can claim that introductory discount offer. All right. So headlines this week: inflation slowing. So this was the CPI that came out. Actually, this was Friday's data, right? So kind of do an inverse here. Let's start with this one, right? This was Wednesday's data. This was the delayed jobs report that we were supposed to get, but didn't because of the partial shutdown. We saw a big jump up in the number of hires here in the month of January. So 130,000. That, kind of throws a little bit of cool water on perhaps what the Fed might do. And then, of course, on Friday, you get the exact opposite where you had inflation cooling off. Remember, these are sort of competing forces. We are talking about, the real economy and real people's lives here. But generally speaking, right, a more stressed job market is going to help the Fed get those cuts quicker. And as inflation cools off, that'll also help the Fed get those rate cuts in quicker, right? So these things kind of competing against one another this week. Net, the market still isn't expecting any cut here in March. So March is the next meeting, March 18th. We've got FOMC minutes next week, so we'll want to pay attention to that. But right now, it doesn't seem like there's too much activity happening on the next meeting. Now, I posted this chart on X, goodbye 6040, hello XLE, XLB, XLP. Again, we've been talking about this now for a couple of weeks at least, but the changing of the guard coming into this year, it has been energy, materials, staples. These are probably the least owned sectors of most people's portfolios, mostly because the weightings have gotten so small, especially if you're a market cap index weighted investor. You could throw industrials in here too. XLI also very strong, but the point is these continue to work. This is the consumer staples. This is XLP. I mean, this is basically a momentum stock, a high charged momentum stock, and they are rushing in. Basically, get me in at any price. PE ratios do not matter because the only thing I know is that Costco, Walmart, Coca-Cola are still going to be producing, still going to be existing in a land of AI agents that are taking over our digital world. Here's XLU. So this is the latest now to sort of join the frenzy of momentum. Now, mostly, you could tie this to what interest rates did this week, which started to, really crack some more meaningful levels. But we now have XLU, which is breaking out and now sort of eclipsing or taking out those prior highs. Nice kind of rounded pattern here with a good pickup in volume. Meanwhile, these are the Mag 7, and we're going to spend a lot of time looking at the Mag 7 today. They are losing some very critical levels, and they look absolutely terrible. Market performance this week. Now, I did download these slides about 20 minutes before the market close, so apologies if these numbers on the weekly numbers are slightly off. Generally speaking, though, gold and bonds, those were your saviors this week. Defensive assets, historically acting as defense. There was a lot of volatility in GLD intra-week, but they managed to hold things together. Take a look at SPY, Qs, Dow, Russell, all negative this week. Here is the SPY. You did have a chance to sort of get out this week, right? We kind of opened and we gave some opportunity here to get out at the highs. One of the themes we talked about last week, we talked about that rough Thursday session where momentum and retail owned stocks got crushed. and we, basically tried to leave with some wisdom into the weekend that if you felt a little bit uncomfortable in the stomach, use the rally to perhaps take some risk off the table. You did have a chance to do that early this week, and then we sort of rolled over into the end of the week. VIX is going out north of 20. So again, we're feeling some stress. It's a long weekend, so markets are closed on Monday. That's not helping the case. So there's more possibilities of, President Trump's antics of posting, who knows what for an extra 24 hours where we can't risk manage anything. Dollar index mostly flat this week, not too much to say about it, but the 10-year Treasury yield, this is notable. This is taking a leg down. Remember last week we were up here, right? We were still holding above this 4.2 area. We were just compressing in this range, and we said let's pay attention to how this resolves. It's resolving, and it's resolving fast. It's resolving sharply here. So we're coming all the way back down to 405. Not quite at the psychological 4%, but it seems like we're going to be touching that in short order. XLU responding in kind, that was the best. Real estate also responding, right? Cheaper interest rates, that's going to help. And materials and energy and staples and industrials. These are, at least these guys are, the leaders that we talked about. Not so much this one, but these guys here. And then we just have really the interest rate sensitive sectors that we're doing the heavy lifting there. In terms of breadth in our trend model here, our momentum model, things are picking up. So we got more sectors here that have firmed up. We've still got 3 tech, healthcare, and communication services kind of stagnating in the middle. Financials, discretionary, we're just outright bearish on them given this model. Now, 52-week highs and lows. Again, you're going to look at breadth underneath the hood. The average stock, the median stock in the market is performing. There are lots and lots of stocks hitting 52-week highs. Everybody wants a stock picker's market. We got a stock picker's market. There are things that are working, probably just not the things that most people own, unless you've been watching these videos or you've been digging through the sectors we've been talking about. These are the things that are holding up. Bitcoin, I think, is interesting. We're going to look at some individual charts in a moment here. This feels like, right, I'm going to make a little bit of a bold call. Feels like that's kind of the retest here that might give us a higher low. Could be totally dead wrong in this, but I did pick some up for a tactical trade. All of our long-term models, all of our intermediate term models, not involved in Bitcoin. This is more just a shorter term tactical call that I am looking for. I think if I'm right, and this can be some type of higher low, I think that gets us back up towards probably the mid to upper 70s. And then I think that's really the hard decision point, right? I don't think there's too much more in the gas at this point, but if this can hold in here, it's still an aggressive counter trend trade. I will manage this very tightly, right? Also with some options. So do not blindly follow. I could be out of this by Wednesday or the next meeting, the next recording. So just be aware. But I do like the kind of wear it down consolidation. You probably get everybody freaked out in this spot that we're about to kind of come crashing down to lows. And then that's, where the bid comes in. FOMC next week, the minutes. So that'll be important to see. And PCE, core PCE coming out as well on Friday with some more econ data. So those are the big stories. We're going to get into some individual charts here now in just a second. Okay, we've got TC 2000 open here, and we're going to go through some charts. This is the S&P 500. This is the cash settled market weekly chart. So each bar here represents 1 week worth of trading. And you can easily see based on this chart that we have spent the last 2.5 months going sideways, chopping around between 6,800 and 7,000, a pretty tight range, all things considered. Call it about a 2.5% high to low range. So again, we're building energy here in the S&P 500. And if you zoom out even further, you can see that, really going all the way back to even September of last year of 25, we haven't really made too much forward progress. It's been this gradual to sideways sort of range that we find ourselves in. And so if we go to the daily chart, you can see this just illustrated even more cleanly now. I think the sideways consolidation is starting to get put on everybody's radar. And we know based on market history that these ranges that, start off or continue to compress lead to expansion. And so I'm still of the belief here that we are going to get a powerful, and given how much time we've spent here moving sideways in this 2.5% range, it is very easy for me to believe that we could very quickly be down to 65.50 or so, testing these October, December, fourth quarter lows in a week's time, right? Because I think if the dam breaks here, if we break below 6,800, feels like that's the cascading sort of period that's going to just move us down pretty quickly, right? Again, I'm going to keep an open mind. I'm still net long this market as a whole, but I do see the cracks and warning signs that are stacking up here in the S&P 500. Now, what negates this? It's just a breakout, right? I mean, that's as simple as that. I mean, if we can hold the lows once again, and we can work ourselves up and start really busting through the 69, 57,000 area, then I get a lot more comfortable and complacent, and I can start to raise up stops and understand that the structure of the market is shifting back to the upside. But right now, I think we're just still kind of in a range here where we need to be a little cautious, a little aware of the risk and the exposure we had on, like we talked about last week with Thursday's shot of volatility. If you felt like that was a lot, then, use this week to sort of lighten things up or put on hedges or raise stops or whatever you need to do to sort of live to fight another day. Here's the NASDAQ 100, right? And this is where I find even more trouble, is because the NASDAQ 100 has now really, going all the way back to October timeframe, spent time in the same exact sideways range, right? The S&P 500 is, objectively just a little better, right? There's more diversity in the underlying holdings. The NASDAQ 100 is tech heavy, and tech is not faring so hot right now. And so for the Qs, we've spent a lot of time between 590 and 630. And while we are still, holding in this range, it is looking increasingly more dicey here. So this is the weekly chart. And again, we kind of have an inside week. So last week was a wide range week. This week's an inside week. And that tells us, right, compression. It tells us to watch out for the breakout. And so I think we want to be on alert next week. When we think about the NASDAQ 100, I will say, going all the way back to October, every time the NASDAQ looks as terrible as it does, like it does right now, that's when the sellers just seem to get exhausted and we seem to just lift right back into this range. So, again, when it looks the worst, and this is what ranges do, we tend to mean revert until they don't, right? Until the rubber band snaps, until the mean reversion doesn't happen. So I think we can all be open-minded right now as technicians looking at this chart. Set your alerts, right? This weekend, if you don't have an alert set at 590 or 595 for QQQ to break below 590 zone, to manage risk, right? To do whatever you need to do. Or if you're a believer in more mean reversion, then I guess you're buying the dip. But I mean, this is a big, important area now, zone for the market, and we need to sort of respond accordingly. We're going to talk about the Mag 7. Before we do, though, let's look at the VIX. So the VIX is going out north of 20. So there's some fear out there for sure. Again, it's a long weekend, so you probably get a little extra hedging and uncertainty out there. But there's definitely fear out there in the market. Earnings season is largely, earnings is still happening, but I think a lot of the heavyweights, the bulk of earnings are out. I'd say the bulk of earnings have been good, maybe even great. But price action is not responding in kind, right? So again, you're getting this great news and lackluster action, which gives you, again, more clues at least in tech land, that the market is a little hesitant and resistant here. VIX is staying bid. We talked about XLP going vertical, right? Defensive area of the market. And it's not exactly where you want to see money capital rotating to. You're seeing utilities play some type of catch up. You're seeing healthcare start to firm up and look like it's acting, looks like it's ready to catch a bid on its next run up. You still have energy that's working, right? So not defensive. This is cyclical, and this is, back to the real world economy that's working. Industrials are working, materials are working. The problem is these 3 and 4 sectors that are working are relatively meaningless if communication services and technology start to enter a bear market or get sold off aggressively, right? It's going to take down the indexes because of the composition of the indexes, right? So again, it is a stock picker's market. You can still make, there will still be plenty of these stocks right now. There are hundreds of stocks hitting 52-week highs. Our momentum engine is still finding lots of stocks that are working, but you've got to go underneath the hood and you've got to go outside of tech, right? That is, again, reiterating essentially the same message we've been, hammering home here the last few weeks at the least. Here's gold. Gold was up this week, 1.55%. It did have a 3.5% down session, so it's not without volatility, but gold is still kind of meandering here. Again, admittedly, I don't really love this action here, the way this is kind of, stalling halfway from its highs, but we'll see, right? I'm still long gold, still heavily long gold, still have stops in place, still risk managing as always, but it worked this week and we'll see if the buyers can continue to keep that afloat. We did talk about Bitcoin. Here's the IBIT chart. So the largest Bitcoin ETF. And again, you can see it was down this week. So it was down 1.59%. It's an inside week, ranges compressed, but we've done a lot of damage here in Bitcoin, right? And, it seems like while everybody wants the next vertical momentum, cascade down, this is probably where, there was a lot of forced liquidations here on this Thursday session last week, which I think really just kind of exhausted sellers at this point. And while everyone is fearing another leg down, again, I do suspect that we could at least just float here. Small counter trend trade, not making some big claim, not saying we're going to 100K or the big trend is reversed. That's not the case. This is just a tactical, opportunistic sort of play on the long side. So at least that's what I'm doing. I covered that earlier. Let's talk about the Mag 7. So this is what has me more. Let's just run through here, see if I can get everything out of memory. This is Apple. So Apple took a huge hit this week, down 8%. Big down week for Apple. This had been one of the better looking, kind of resilient, non-heavy CapEx spending Mag 7 stocks, and it reversed very sharply this week, put in an ugly kind of breach below last week's lows. And again, you have sort of this ingredient now of potentially like a lower high that is setting up here in Apple that could get you back down to the lower 200s. Again, not a claim that it has to go down there, but the technicals here certainly are pretty weak now after this week's session. Microsoft, I don't really think I need to say too much else. This has been probably the biggest loser recently. It's in one of the largest drawdowns it's seen. The best thing you have going for Microsoft is that it has already suffered a 30% decline. But on the weekly chart here, you could still come down to the upper 300s here or even retest the lows from tariffs. It just looks a little dicey. It's more oversold, but, it looks rough. Meta looks rough, right? This is the weekly chart of Meta. Almost looks like you could be carving out some type of head and shoulders or something that's rolling here. Again, earnings growth guides were good, but the stock is getting sold off, and it, as good as Meta's earnings were, it's filled the gap and then some, right, to the downside. So this doesn't look all that great to me. NVIDIA is just the wild card here. It's super sideways. It has gone nowhere now for 6.5 months, 7 months. It tried to break out in here. It failed. This reports earnings. This is off cycle. So this is earnings in, I think, a week or two. So I don't think it's next 225. So yeah, you got 2 more weeks for NVIDIA. That's probably the catalyst that's going to get this up and out, one way or the other of the range. And maybe this is where the market and the Qs and everything takes its direction from. But this will be the big heavyweight. Lots of sideways energy here. Amazon looks terrible after this week. It broke down from its range and, coming back in to fill some gaps. It spent a lot of time sideways. I think Tesla is, jury's still kind of out on this. I'm trying to maintain a position. I've taken everything down very significantly. I'm at just like a very minimum amount of a placeholder position here in Tesla. I want to like the story this year, but I think it's still just in a tough environment right now. So I don't want a lot of exposure, if any. And Google now is starting to roll over after raising 100-year debt. And so Google, Tesla, NVIDIA, you're kind of okay. They're not the worst looking charts, but I would say Mag 7 has not looked this bad in a very long time. And this is one of the Mag 7 ETFs, and you can see it starting to break here. So again, when you think back to what the Qs are going to do, if you continue to get weight and pressure and downside snowballing of Mag 7 stocks, the QQQ's likely direction is a resolve lower. And, again, that could still mean that you have comfortable rotation in some of these other areas of the market. So that's what I would, just impart here as when you're doing your homework. Again, lots of these areas now are getting a little frothy, but I'll show you some of our ideas on our models. So I think that's everything I wanted to talk about. Again, just to reiterate as well, IEF. So this is bonds, 10-year bonds, breaking out this week. So interest rates coming down. That is nice. That's encouraging. Small caps still kind of basing out sideways here, looking a lot better than SPY Qs and otherwise. But TLT, zeros, all of these Treasury is looking pretty good. Okay, let's look at our models here. So we run 2 models, our all-weather model and our momentum model. We've got a fully redesigned member dashboard now, interactive, rich data. This is now live, still in beta, but you can see each day now. So S&P was up 0.5% or 0.05. Galahad was up 2% on Friday. Our momentum model was up 0.4. We've got a buy and sell signal. A couple of things to note. So this is our momentum gauge underneath the hood. So it's kind of a proprietary look at our Quant Rockets momentum. And we are starting to see momentum improve. That is a change. We've actually been pretty flatlined here. And so momentum's more stats about Galahad over the last 5 trading sessions. Let's look at some individual stocks on our Quant Rockets model. So I've picked a few of the names that we have in our list. VRT was a big breakout this week. So this was one that we were involved in back here in early January. We had a nice range base, and I'm bringing this up because, it did get faded a little bit, but if you do get some pullback opportunities here, some type of reset, you might be able to get some second entry, some bull flag that develops. So I think VRT, while extended, is still interesting. STX. So this is Seagate. This is obviously all the rage with, hardware or just data storage rather for the AI trade. But this is something that we got involved in back here at 319. It's consolidating. It's putting in a nice sideways, potentially continuation pattern. We'll see. But if it starts moving above 450 or so, I think you could get some type of second entry there. Bloom Energy, I posted this chart earlier on social. So this was, again, one that we got involved in January. It's looking a little challenged right here, but we're still hanging out, right? We've got kind of a, warning signal on it that it could be booted out. It could be an exit for us, but not yet. And so keep an open mind here. If this catches a bid, if support holds around 133, then you could get an actionable kind of move to the upside. And then this was, I think, our big winner on Friday, CI. So this is Solaris Energy. And so this had a gap up. It did get faded, but it was still up. This one is probably the most promising. We paid $53 a share. It's not much higher right now. There's a good sideways range. This is in the energy space. If you're looking for names that aren't extended, but still getting in the right sort of sector with some currents behind you, this could be an interesting one to pay attention to. SEI, we like it, we own it, and we'll see if it works. We'll see if it goes higher. So that's it. There's a little sneak peek of our behind the scenes kind of dashboard and some ideas from our momentum model. If you are in need of help surfacing names, finding ideas that are in not just heavyweight big tech, then Rockets is certainly something that will help steer you into some names that you probably have not seen before, and you can make your own judgment and decisions. We've got links in the description of the show for more information on that. Of course, our Galahad all-weather portfolio. Don't forget our sponsor, IBD. All the goodies in the description of this show for this long weekend. Thank you so much for tuning in, and I hope you have a great weekend. We'll see you back here next Friday. Take care.